That means tomorrow could be a huge day for the market. So let's get right to the floor show to game it. It's the, let's call it the Nuck and Tuck floor show. Our star traders, Alan Nuckman live at the SIBO and Peter Tuckman from the New York Stock Exchange. So we've got Nuck and Tuck and Clay because we all end in man on our names. So let's bring it here. Peter, the numbers crunchers say that the economy added 160,000 last month. We'll know for sure tomorrow. But we all remember what happened in July when the jobs report whiffed and stocks tanked on the news. How are traders on the floor of the NYSE girding for tomorrow?
So look, I think it's really important for us to note what happened on that last report. We had a very weak Federal Reserve meeting on Wednesday. Thursday, the numbers came in looking for 177. We came in at 114. Then we set ourselves up for that perfect storm weekend where you had the carry-on trade, Japanese stock market crash, and then we came in on that morning and we were down 256 handles. So that labor number kind of got lost in it, but it was the catalyst to that big perfect storm that forced that big sell-off we saw the last time. These numbers are sort of, they're sketchy at best in my opinion because they're always adjusting back and forth. But what it does is it sets us up for all the anxiety that the market is setting up, that catastrophism around the labor numbers that are going to come in tomorrow because the market has been fragile ever since that last report.
But Peter, you see the flows on the floor ahead of the report. Are you seeing any interesting moves on behalf of people who are buying and selling and the middle makers, the middlemen there?
You know what, the way the market trades these days, it's really hard to identify that kind of action in the name. You started to talk about the divergence between the Dow and the S&P and how the independent weighting that happens in the Dow, which is a less of a significant instrument than the S&P 500. That's why we'll often see, obviously, with the Magnificent Seven, can really make the S&P move while the Dow can be really adjusted by UNH, by Pfizer, by some independent names, can completely skew the Dow Jones Industrial Average.
Yeah, you know, we should look at some of the leaders and laggards here because, Alan, am I right? I mean, this is a broad-based rally. Unlike the other day when we saw NVIDIA down 9-10%. I mean, that knocked off more than $270 billion from the market cap of that company in a single day, the most of any U.S. company ever in history. And all the other chip makers fell. The SOX was in distress. Today, it's just kind of everybody middling around or slightly lower.
Right. Well, the toughest thing is to predict profit taking. And what Peter was referring to, what happened in August, was purely profit taking. But for me, as a market watcher,
July or August? Because July,
as a market watcher, yeah, back in August.
Okay, so August 5th.
But what we're keeping an eye on is how the markets react. And the fact is we had a 10% rally and got within this close of the all-time highs just last week before we saw another profit-taking round on Tuesday. So it's impossible to predict how the market's going to react to the jobs number, but these numbers are less outstanding. They're still outstanding, but they're less outstanding, and that gives the Fed permission to cut. Cuts are coming, and that should be bullish, but we have to also be aware that that may be part of the reason we are in the position we're in. Is that going to give people some excuse to take more profits? Because almost everybody is in profitable position unless you just bought in. You've got all these built-up profits, and then greed comes into play.
Can you agree, Alan, that the next rate cut, if it does come, but it's widely expected, in a week and a half or two at the next Fed meeting will be 25 basis points, but you're saying there's a 75% odds that one of the next three will be a 50 basis point cut. So, I mean, which one? Is that going to be November, December?
That's what the markets are telling us. But again, the most important thing, it's not my job. You don't make money with these parlor games picking which one's going to be a 50 or a 25. You make money predicting how the markets can react. We're in a bull market. The VIX is down. The dollar's down. Interest rates are down. We've got inflation down. So all of these are pretty immovable forces unless there's some catastrophic number or sentiment shift. You know, we should see how the markets react. Now, there might, again, be some profit taking after this Fed rate cut because it's been so widely expected. Then people look on to what's coming forward, and that's what these markets do. They look forward, and I still see us in a very, very bull market. If we can hold this 5,500 level where we stand right now, We've tested it a couple times. We've been in this range. A breakout of those highs should see a nice quick move to 6,000 or very close to it.
Hey, we're only 6 points above 5,500 right now for the S&P, so let's not jinx it. Peter, I know you want to get in here. Peter, if anybody is a risk taker, it's you. I ran into Peter Tuchman at the top of the Vail back bulls. He's like, bye, Liz, and he goes right down China Bull. Unbelievable. So take a risk here. Tell me right now, are we going to see a 50 basis point cut November, December, maybe September?
I agree with Alan. I don't think it's a matter of whether it's 25 or 50. There may be a 50 coming up. I think we need to analyze the fact is 10 days ago, the market was trading at record highs across the board on every indices. Has anything fundamentally changed since then? Absolutely not. So this is just the way markets go.
Okay.
We have think about the move that NVIDIA has made over the last year. So it makes sense that the stock is going to have that kind of a pullback. That the stock is going to pull back. When it pulls back, it's going to have the kind of move it had, because it went from 108 in February 2023 to 900 a year later. It makes sense that when it finally rolls over, it's going to have that kind of what appears a catastrophic move, but it's not a catastrophic move. It's in line with what's going on in the market.
Yeah, NVIDIA right now at $107. I believe on August 5th it fell to 99 during the session.
Nothing has fundamentally changed.
Right. You never know.
And there's gaps up above. There are gaps up above in the charts to fill in NVIDIA. So I would not say it's over.
Okay. All right.
I agree.
I would not say Peter's skiing life is over either, the way I saw you ski, Peter. All right, great to see you both. Alan, Peter, the Nuck and Tuck Show. Thank you so much. EV charging company ChargePoint losing its spark at a very rapid clip at this hour.